Thank you. My name is Irina. I'm heading investor relations and also sustainability reporting at Mr. Spex. Afterwards, please feel free to reach out in case of any questions. There is, of course, an email on our website, investorrelations@mrspex.de. Otherwise, with that, let me kick it off. Just a warning, I will be jumping a bit between the slides. However, I think it's pretty easy to follow. So nonetheless, Mr. Spex, leading digitally native omnichannel optician in Europe. Normally, I would like to start with kind of a snapshot view of a company, what we are, like a few numbers, just to get a bit of perspective on a topic. Then I would probably start with the bigger picture. I'll start with the market. I'll talk about the different, I would say, factors, forces that are influencing it, or kind of the move of the market. Where is it moving in a way? Then I will kind of deep dive further into where are we positioned, what is our equity story, what is our model, why is it what we are actually doing right now. And then I will pretty much, if we have time for it, then I will dive into our Q3 figures, which is the last figures we have released a bit over a month ago. And then I'll open for the Q&A. Without further ado, starting then, let's do it with Mr. Spex at a glance. So as I said, this is a 2022 view. We're operating in a financial calendar, for those of you that don't know. So therefore, we will be updating our figures, so to say, or we'll be releasing our 2023 figures in March next year. So therefore, this is still reporting annual figures for 2022. So we're a bit over 200 million in sales. We are operating in the market for over 15 years right now. 14 years, we had a double-digit growth. Last year was the first sort of year that we had a single-digit growth. We're operating in I would say, relatively good high gross profit margins. Slightly north of 50%. On that, we'll discuss a bit further down the road in terms of what are the moving factors behind that. Our adjusted EBITDA came at -8 million last year. This year will be significant improvement, as you will see in our guidance, whereby we're guiding for a positive adjusted EBITDA for 2023. We're operating in 10 countries. Keep in mind that we don't have stores in all countries. We only have stores in 4 countries. Our biggest market is Germany, as you can see, kind of on this in the middle of the slide. So Germany represents a bit over 150 million in sales for us. This is our core market. This is where we originally started the business. International is pretty much Switzerland, Norway, of course, Sweden, and therefore for us, and of course for us, that's why it's a slightly smaller market. However, I would say it's still sizable. Thinking about what are our kind of category groups, where we're playing in, right? So we're playing in the field of prescription glasses. So it's pretty much these ones, also sunglasses, as well as contact lenses. As you will see, they're pretty equally split, more or less, right? So prescription glasses, almost 40%. Another 30% in contact lenses, and almost 30% in the sunglasses. All of these categories, they have different gross margin perspective, and they also have, I would say, different purchasing kind of trends or behaviors throughout the year, therefore leading to a bit of seasonality between a quarter, for example, a third quarter and a first quarter, driven by the sun business, which I'm happy to talk about afterwards as well. However, this is Mr. Spex at a glance. Well, now let's kind of zoom out and think about the market, what it is, or what are the moving forces behind it. So the eyewear market by itself, it's very large, and it's what I think is even more peculiar is that it hasn't changed in the last 100 or so years. If we think about the global eyewear market, it's a bit over 100 billion. Zooming into Europe specifically, it's over around 30, and then Germany is around 6 billion. Some of the factors that are, I would say, impacting the development of the market, I would say, let me start with the first one. So first of all, it's the online penetration. online penetration is not only impacting us, but for example, of course, also the fashion industry, furniture, electronics, the other companies that you will be hearing from later on today. When we talk about the category and online penetration, it's safe to say that eyewear is, I would say, one of the least penetrated categories when it comes to online penetration. So therefore, even if you take proxy, I would say, as fashion business for where kind of the eyewear can get in terms of online penetration, it can easily go into the double-digit territory I would say, in some time in the future. At the moment, as you can see it's around 9%, at least based on 2020 data. Thinking about, let me go to number 3 and then go to number 2. The number 3 is the fashion and luxury eyewear. So I think it's needless to say that luxury has been somehow resilient in the last year, or in last years, frankly. So this is something that's specifically close to our brand promise, as we're focusing quite strongly on the sort of luxury and premium assortment, which I'll talk about later as well, which of course is supported by further tailwinds and I would say resilience of the overall market. And now let's go into the second point, and I think that's probably one of the definitely the bigger drivers, and it's simply that European population is aging. Therefore, I would say our kind of addressable market, of course, is increasing with every single year as the population is aging, and there's a stronger presence of myopia among the population. If you think about that, keep that in mind, the second one, because that will ultimately be a good segue in a sense of how we run our I would say business, so to say, in online and offline. If I would say a few points further on the German market, and more about the fragmentation of the eyewear market. So what you see on the right-hand side, right, it's very, very fragmented. So we have around 11,000 outlets or stores, physical stores in Germany, whereby the top 10 players, so to say, they only make up around 20% of the total outlets. However, at the same time, if you think about the revenue, they make up basically almost half of all the revenue that is being made. Also, what is interesting, and this is the data I would say from the kind of German sources, is that roughly 300 outlets or stores, 350 outlets have been closed in the last 3 years, and this is something that I'd say we continue to see. Of course, the data is not very granular, it's not very clean either, but this is the general trajectory that we see, is that with every single year, there are fewer and fewer outlets, especially coming from those sort of 78%, which you see as others. So yes, on this point, what I think is interesting is that as I briefly mentioned before, is the whole topic of aging population. Keeping that in mind, I think this is a good segue to talk about our customers, actually. So when we think about our customers, they are, first of all, they're, I'd say, quite digitally savvy. However, for them, I would say what is especially important is the ease of the shopping experience, an ability, I would say, to get the latest looks, the latest fashion accessories, the latest, I'd say, statement pieces when it comes to the eyewear. So therefore, if you look into, I would say, kind of the green part of a chart, this is exactly where Mr. Spex is playing in the moment, right? So we already won this kind of segment of from 20s to mid 40s. They're the ones that are the most, I would say, technology affine. They're the ones that quite often buy first online as well. And this is also how our kind of business model has started. Our business model started first online, and then we have opened stores progressively over the years. And right now, as we speak, we have 76 stores in Europe and 65, if I'm not mistaken, here in Germany. So what we see is that, yes, basically we're currently playing mostly in this field. However, as I said, As the customer, I would say, becomes older, there's a growing presence of myopia. What we're also doing is we're opening stores in order to attract the, let's say, kind of the other 30% or so of the market that are predominantly thinking of buying prescription glasses. Prescription glasses is quite frequently or most often is being sold in a physical retail store versus online. And this is also one of the reasons why we're opening retail stores, is in order to support our customers in their purchase of prescription glasses. Why is it specifically, I would say, kind of important at this point in time, is that prescription glasses are the most margin accretive category that we have. So we think about roughly 75-ish percent on gross profit margin. Versus, for example, sunglasses that are a bit more seasonal, right? And they're, I mean, I would say can be easily anywhere around 40 to 45% gross profit margin. The third category, just to kind of like close the loop, is contact lenses. And for these, the gross margin profile is around 25%. So as you can see, in a way, while we're starting online, our move towards offline is significantly driven also by supporting in profitability, because, as I said, prescription glasses, the more margin accretive category, are quite pretty much frequently are being sold in the physical retail, following, of course, the eye exam. And that, of course, supported by a store staff in order to choose the right frame for the right face. Good. So as I already kind of started talking about the right frame for the right face, this is actually our brand promise of Mr. Spex, the perfect frame for every face and perfect lens for every eye. When we think around our, I'd say, kind of brand promise, strategic positioning, we always think of those kind of like three areas. It's intuitive experience, or ease of experience, the style, and then the optician expertise. I'll slightly jump right now, as I said. So let's start first with ease, right? Basically, what you see over here on the slide is our omnichannel model. As I said, we first started online, then we started to open up stores. Therefore, we created an omnichannel model. The only thing it has to tell you pretty much is that it doesn't matter where the customer wants to start their journey or where he wants to continue their journey. In fact, you can do the eye exams online and offline. You can select the frame using our, I would say, either store opticians to support you, or alternatively, you can go on our app. And of course, there is, I would say, there's a scan that will basically scan your face, and based on your definitions, it will, let's say, recommend the better frame in terms of what for example, the width. Or the kind of the brightness of the frame. So in a way, this is something that both can be done in person as well as online. The virtual try-on, of course, this is I would say, the third pillar of it. The eye exams, as I mentioned before, the lens selection, you can do it as well as online as well as offline. It is the same pricing. It's pretty much the same offering, and of course, you can either get your glasses directly at a store in case of, for example, sunglasses, or alternatively, you get it shipped in case you order the prescription glasses. So overall, as you see, the kind of the entire, I'd say, journey is relatively fluid, so to say. You can start at any particular spot and see how, what basically fits you and fits your lifestyle better. So this is the topic of ease. Style. Style is, I would say, there will be another slide on it a bit afterwards, but I wanted to pinpoint on this one. So this is our flagship store in Cologne, and please reach out to me in case you will be interested in a store tour, for example. This is our flagship store. It's 2 floors. Normally, our stores is only 1 floor, so the ground floor. The second floor for us is purely luxury and boutique. So this is, I would say, kind of the stairways that kind of go to the second boutique store. There, of course, you have a lot of brands. For example, Kenzo's, you can see there on a photo. For us, this is also one of the ways how we're working with our suppliers, because we're able to provide them the space, the customer composition, as well as, I would say, kind of the aesthetics that will feed into their, I would say, brand positioning. So this is so far the only store that we have when it comes to a flagship store. All the other stores also have boutique and luxury assortment. However, this is the only one that has an entire floor dedicated to this. Sorry. Something just to kind of add a few numbers on that. Once again, our brand promise. So the whole kind of boutique sales, what I explained earlier, is roughly 20% of our sales. This is the 2022 figure. It continues to grow this year as well, and we expect to continue to grow even more in the future. We have roughly 40% of our returning customers are using a recommendation tool. This is exactly what I mentioned. This is, you take your iPhone, there's an app, and a tool is able to recommend you what kind of frame works best for you. And then, of course, we have a lot more online eye exams. Customers are adding the options for their lenses. And yeah, as the last point, we have, almost 200 brands that we're working with, and we're constantly adding new ones. Moving on to, kind of moving on into how does this kind of online and offline actually work together. We see actually a lot of synergies between the two. At this point in time, or kind of the last, sort of the H1 2023, what we released is that the online and offline share is roughly 70-30, so 70 for online and 30% for the offline part of the business. What we see is that roughly 70% of our store customers are actually new customers. We also see that the average age in the offline or brick and mortar is anywhere around 45 years old. So therefore, exactly, we're tapping in the slightly older, more mature age group. The ones that are specifically interested more, for example, in prescription glasses versus sunglasses or contact lenses. At the same time, online helps us reach scale. And this is also something that we're benefiting, and as a result, we're benefiting from relatively high brand awareness, which is 72% for Mr. Spex here in Germany. Moving on to, I would say, yes, if we look into kind of the microcosm of a specific region where we both have a store as well as we'll have online presence, what we see is that at least 20% of our prescription glasses customers are omnichannel, means they buy in both channels, or at least one of them, so offline and online. We also see that, as you can see on the left-hand side, we very steadily continue to increase our online and offline, I would say, split closer towards, probably midterm will arrive anywhere towards 50-50. At this point in time, as I said, it's 70-30, but with more store openings, this number will sort of start moving even closer towards the 50-50 split over time. This model, the online and offline, I think is interesting because in a way it cushions us in bad times, and at the same time it supports us in kind of in a normal market environment. What you see here is the data from GfK. This is let's say data that is pulled for 2019 and for 2022, so pre-COVID, and I would say kind of basically COVID more or less. What we saw is that we consistently outperformed the market for like in the period of like all of the 2 months periods. And we continue to do so when I would say the consumer sentiment is down as well. So in that sense, I would say we're quite well, let's say, positioned just to weather the storms. To that I already discussed earlier. So it's the margin profiles of all the prescription sunglasses and contacts. What I think is interesting is, of course, the repurchase cycle. We see a purchase cycle for prescription glasses anywhere around 2.5 to 3.5 years. On average in Germany, it's around 4 or 4.5 years, actually. So for us, it's a bit lower because our customers are generally a bit younger and they're a bit more fashion focused, fashion driven. So therefore, many of them would have 2 or 3 or 4 or 5 pairs in order to fit to, I would say, kind of their general look and the style that they're carrying on a specific day. Sunglasses is more of a seasonal category. You would see for example, there's a kind of an Excel with all the quarterly data available on our website, and you would see there is, I would say, a relatively high spike every single, kind of like Q2, Q3, specifically driven by the sunglasses season. So in a way, it is an impulse purchase. However, what is important is while it is right now, let's say around 30%, 25% of this are sunglasses with prescription. So this is, I would say, a very kind of strong category that continues to increase. And of course, this is also not as margin accretive, unfortunately, as prescription glasses, but a lot more margin accretive than just pure sunglasses because there is a prescription element to that. Contact lenses is around 30%. It's a high repeat purchase, but once again, this is a category with relatively stable and relatively, I would say, slim margins. This is also the category that we have tried to and continue to reposition away from. We have, for example, the share, what you would see is that over time, the share of contact lenses would actually decrease. And that's pretty much exactly what we have also reported in the first 9 months of this year. Over time, since I already started talking about it, what we'll see is that prescription glasses would start to take up a bigger chunk of the business. Sunglasses would still remain, I would say, somewhat sizable, but the contacts would decrease over time. And that, I would say, kind of put together is ultimately one of the bigger drivers for gross margin growth, supported by higher share of prescription glasses, especially driven by higher number of stores, as well as, I would say, more tech innovation around recommendations for kind of a specific frame for anyone's face. Good. So I'd say this is, I would say, relatively high level. If anyone is interested, I better also talked about it. We have almost 200 brands under our roof. We also have 7 brands for own brands. It right now represents around 15% of our sales. For us, own brand also includes collaborations. So collaborations mostly with German influencers. We had around 12 collaborations this year. Probably something similar will be around next year as well. This is something how we also able to reach more fashion-themed customers, a bit more, I'd say, younger audience group. We're able to get those sold-out collections. The collections get sold out within the first 2 or 3 hours. So it's also a bit of the brand positioning topic. It's a bit of a marketing topic. Of course, all of them are profitable. And of course, we have also collections that are continuing to, I would say, be rolled out from 1 year to another year. But also we have, I would say, kind of a one-off collections with specific influencers. Good. So this is, I would say, relatively kind of big picture on Mr. Spex. Just probably a few pinpoints around our Q3 results, which were just released roughly a month ago. Yes, I think, let me just kind of simplify it here probably. So as I said, right, and as you saw kind of in the earlier slides, is that we'll continue to perform, even if the market was relatively challenging. Something that if you will look into our presentations or have looked at our presentations before, we always talk around consumer sentiment, because we see it's a very important topic for us and for general consumer stocks here in Germany. What you see, the consumer sentiment hasn't really improved much, so it's still relatively low. So while there, of course, there's significant improvement from December last year, but still it's way, way, way depressed from the highs that we've seen a year ago or two. So that, of course, is a bit of a negative backdrop. This coupled with unseasonal weather patterns here in Germany, it was a bit of a kind of a mix between the 2 months that have ultimately resulted in, I would say, quite a different performance to what we would normally see.
Excuse me, I'm sorry to interrupt, Irina.
Okay,
we are unfortunately running out of time.
Fantastic. Let me just one point, and then I'm opening it to the Q&A. Wonderful.
Great.
Good. Just one point. I haven't had time to mention it, but basically what it is, it's ID. I'm wearing one right now, so this is something that we invested in roughly 2 years ago. It's a 3D printed technology. We're not 3D printing ourselves, but we own the tech behind the face scan that is also used for recommendation tool, as well as I would say the brand. And right now, as of I think a month ago, you can buy ID or you can order your own ID specifically for your own face inside all the stores in Germany. Hence, with that, I'm happy to open for the Q&A.
Okay, great. Sorry, Eero, go ahead.
Thank you, Irina Zurba, for the interesting presentation. And yeah, it is indeed fascinating how digital tools can transform a traditional bricks and mortar business like the optician shops. But now, let's move straight over to the Q&A with Irina, and over to you, Oliver.
Thank you, Eero. I was jumping in because we have quite a lot of questions and not much time remaining. So
okay, I'm happy to answer them all afterwards as well. Yeah.
Let's get right to it. So first question is on your presence in the Nordics. You also cover the Nordics, and what is your plan there? Will you also pursue the omnichannel approach in the Nordics?
Yeah, we have I think 3 stores in Sweden, if I'm not mistaken. So we already have an omnichannel model. We originally bought in 2013 2 kind of companies there. One was called Love Eyewear, and the other one Lens Store, I think, if I'm not mistaken. So of course, right now they're fully consolidated inside Mr. Spex. We continue to operate the model. What is unfortunate is in the last year we have significantly focused on Germany in the core market. So what we have done is that we have moved, I would say, very large chunk of marketing budget away from international, which includes also, for example, Sweden, into the German market, because for us, simply we benefit from much higher brand awareness. So therefore, for us, the ROI on the marketing euro spent is a lot higher in Germany than in Scandinavia. However, for us, it's still a market that we're present in, and of course, while we haven't invested enough in the last year, I'm not saying that we won't, for example, in the next years, because of course we see a lot of potential there. And we have a relatively long-standing business, especially in Swedish market. Yes.
Yeah, I'm just wondering, I mean, you mentioned that the online penetration in the eyewear market was something like 9% in 2020. Can you provide any granularity there? So is it higher, for example, in Scandinavia, because they always seem to be ahead when it comes to digitalization compared to Southern Europe or Germany?
Yeah, I don't have the numbers on top of my head, but you're right that Germany, I would say, is more of a laggard when it comes to especially online penetration for the eyewear. The top markets are still UK, though. I think it's around 12 to 13%, if I'm not mistaken, the online penetration. Nordics are a bit below that, but still, I would say, kind of higher than the German backdrop. But yes, of course, if you need granularity, I can look into that as well, especially for the Nordic sector.
Okay, great. Are there any plans to expand the offering beyond eyewear, for example, into hearing aids or fashion items?
Hearing aids would be, for example, our biggest competitor here in Germany, Fielmann. They are offering hearing aids. Our customers are much younger. Let's start with that, right? So for Fielmann, the customer is probably around 50s, 60s. Our average age of our customer is around 33, 35. So hearing aids is less of a topic at this point in time. However, of course, it's an interesting market, but nothing in the short term, so to say.
Okay. Then there's a question on your balance sheet. You have more cash on your balance sheet than your market cap. Why is that? And what is the plan with the cash?
Yeah, so we have 117 million end of Q3. We're guiding, so to say, on market for 105 to 110 million end of December. So those are the figures that will be released end of March. I would say the plan is to focus first on decreasing our free cash flow burn consecutively from this year to next year. So therefore, what we see is that at least the kind of the narrative is that we want to have around 100 million in the bank account and a very profitable store business operating that is able to support itself. And then obviously from the capital allocation perspective, we have zero debt, so there's nothing to repay. And only the long-term leases, of course, but no bank debt, so to say. We also, of course, this current market environment may present an opportunity for a bolt-on acquisition, simply because a lot of smaller peers are struggling, especially if they don't have enough of a cushion behind. However, this is something that we look into very frequently, but there's nothing that we have communicated. Yes, and I think I'm over time anyway. So.
Okay,
Great.
we actually have a few other questions, but I guess we'll relate them to you later on. Thank you very much,
Sounds good,
Irina.
Of course.
Thank you, Irina.
Thanks.
Thank you,
Bye-bye.
Oliver.